Hello, everybody. Welcome back to another market close. It is Monday, February 12th, 3:46 p.m. And we've got a hot market. I mean, this market is just, it is quite unbelievable. We're going to try to make sense of it over the next hour. I'm going to try to explain to my best ability why I think the market is so hot. We've got companies that are hitting 52-week highs. We've got small caps that are starting to break out in terms of IWM, crossing $200 today. We've got Palantir continuing to maintain $25. Somehow there is enough appetite at the 24.90 range, the 24.70 range to buy up the stock, and Palantir's keeping its $25 range. And then we got to talk about Nvda. Nvda obviously going to a new 52-week high, all-time high in this case. $740. It doesn't make any sense. SMCI up another 7%. ARM adding another 40 billion in market cap in 2 days. ARM now 160 billion. This was a company that was at 70 billion 5 days ago. None of this really makes any sense. A lot of this feels frothy. I made some moves in my portfolio to rebalance what I think is potentially going to happen. And so I'm going to talk about that today. And we're going to do a Robinhood preview for earnings. We're going to do a bunch of stuff in this market close to try to get a little bit of clarity on what the heck is going on and hopefully make some sense out of everything that is happening today. So thank you all for being here with me on the market close. I Show Sad, Tom Brady, Legend, Alex Karp, Myra, Mr. Seymour, Duck, Nick Piercy, David, Broccoli Bob, Inspire Rise, Dragos, Thomas. I sold out of Google today. Admit, wow, Thomas. I did something a little similar, so we're going to talk about that as well. Also, Bitcoin hit $50,000. I forgot to mention that in the opening remarks because, goodness gracious, it's Bitcoin. How did I forget to mention that? So much stuff has been going on. Chana, Mark, Sean, Zocold, what's up? Garcia, my guy, what's up? What's up? Artur, you said hi. Hello to you. I'm going to say this publicly because you said it publicly before, but your Palantir short is not doing that well right now, since you shorted at 24.70. Now, granted, I think you'll be okay because I don't know if it can hold this $25 range. But right now, the Palantir short is underwater. Ola, Kelly, thank you for being here. Any good earnings after the bell today? I don't think today there's any real good earnings. Tomorrow we'll have Jesse on the channel. Jesse's gonna be with us for Robinhood earnings, and I'm not gonna look at the stock tomorrow. Let me just say that I'm looking at the chat and I'm not looking at the stock. Okay, I'm looking at the earnings. That's it. I'm going to tell Jesse to not say anything because I don't want to see the damn stock. Okay? I don't want to react to it. I just want to see the numbers. And then after 2 minutes, I'll go to the stock and I'll either cry or be very happy. So I'm not looking at that damn stock tomorrow, dude. I am so nervous for that, but we'll see what ends up happening. Nikhil, Dave, Alan, Brian, Smack Dab Trader, Tim. All right. Thank you all for being here. So let's get into what I did today in terms of my changes on the portfolio. And then we're going to discuss everything going on. We have 11 minutes until market close. We have Palantir to talk about. We have Bitcoin to talk about. We have CleanSpark to talk about. We got a lot of stuff we have to discuss today. And then we'll discuss Nvda. Obviously, Dan Ives saying that Apple's still going to be a very valuable company. We'll hear his new updated thoughts and keep going from there. Okay. So what did I do? I did two moves. I sold something and I bought something. I sold something and I bought something. So first, what did I sell? I have completely liquidated an entire position in my portfolio. The liquidation of this position really was a gut feeling, and I don't have any regret about it, even if the stock continues to go up or whatever. It was something I needed to do. I made $1,000, which quite frankly, for the amount of time I held it, is not a good return at all. The opportunity cost of the capital, what I made like 10%. It's not a good return, but it needed to be done. Google, I am out. Sundar Pichai, we are not going to be drinking some chai together, even though we're both from India, okay? And the reason for why I did this, so this is what I tweeted. I said, I feel like selling something to prepare for this big crash. This was 38 minutes ago, so this was very recent. And Google was on the chopping block. And then a couple of no, it's not Palantir. Goodness, it's not Palantir. Of course not. It's Google. Okay. Now, what is the core logic? The market's frothiness is scaring me a lot. I don't care if we go to 6,000 on the S&P. I will not regret doing this. At that point, Google will probably be close to $200. I'm selling it at $149 because at this point, I am really getting scared about this market. And maybe that's stupid. Maybe that's naive. Maybe I need to go through a lot of these cycles to have a better inkling. But some very smart people that I also look up to are also getting very scared about this market. Market's frothiness is becoming too much for me. I don't want to sell other positions I know will benefit from rate cuts. TFC, I'm already up like 70% on this position. Google was up 10%. TFC, I know, is going to be a three-bagger for me in at least, not at least, but I would imagine in about 18 months, that's going to be a three-bagger. That's going to go from 25K to close to 80K. So to me, I really don't want to cut TFC. PayPal is deep value. There's no need to sell at the bottom. Selling PayPal right now is just stupid at the bottom. I mean, like it makes zero sense to me. Google will probably do well, but I can just buy the stock. I don't have to have my money tied up in the options. Okay. And I actually got them to fill. I put the limit at 1096. They filled at 1115. That's the first time that happened to me on Robinhood, where it filled at a decently higher price than what I put the limit at. And I got rid of 9 of these guys. I made $1,000 on this trade, got rid of 10,000. Now, here's the other core thesis for why I did this as well. Google has not innovated at all, and I feel like their search business, I don't think it's in trouble. I think it has a moat. I don't think it's going anywhere, but it is a little scary to me that Microsoft is taking off, Nvda is taking off, all these big tech companies are taking off, Meta absolutely crushing it. If anything, that money in Meta would have probably done much, much better. But Google has nothing outside of its search business. The cloud business is relatively small. They're trying to get that thing to grow, but it's not really growing as much as Amazon or Microsoft. Google will probably do well in 2 years. Don't get me wrong. Google will likely be by 2026, if we have a regular market, about $200 a share, up from 150. I think that's very possible. That would put it close to that $3 trillion market cap. The problem is, I think there's going to be a little bit of downside before we get there. I am very scared of how the market is acting right now. When a company like ARM goes up 80% in 2 days, in basically like 5 days since last week, when Nvda is higher than Amazon's market cap. Nvda is higher than Amazon. It's $20 billion away from catching Google. It just doesn't make any sense to me. And so from that perspective, it's like, you know what? I want to free up $10,000. I'm not emotionally tied to Google. Quite frankly, I don't give a shit about Google. I use ChatGPT more. I was talking to Kelly last night. She uses ChatGPT now for everything. And it's like, that's not a reason to sell, in my opinion. That's like a lame reason to sell. But in general, I don't care about Google, right? Like I love YouTube. That's great. But like I'm on YouTube all day, but there's just not any emotional reason for me to be like, oh, Google's going to be the winner in the next couple of years that you've got to hold on to. The PE is stupid at 25, but it's also stupid for a reason. So from that perspective, I think Google is just not the world I want to be in. On top of that, Thomas says, honestly, I sold for a very similar reason. They have a lack of direction and unclear long-term identity. I agree. I do also think that is a short-term reason to get rid of Google. I don't think long-term the reason to get rid of Google is like lack of direction. Maybe I'm wrong about that, but I don't think LLMs are going to take their business. But in the short term, let me make it very clear. This is not a long-term bearish thesis on Google. I might get back into Google, but in the short term, dude, it's not exciting to hold a company like Google. Like if I was holding Microsoft or Amazon or Meta, I probably wouldn't have done this, because like even if we get a little bit of a correction, those companies have shown how innovative they can be. Google has shit the bed on, quite frankly, everything for the past 2 years. They really have, outside of increasing their search business, and their search business is getting worse day by day. Not just in terms of the numbers, but of the perception and and in terms of the other applications like Perplexity, which is a company we talked about a long time ago, that's gaining more and more traction. So Google's not exciting to me, and I had to get rid of some of it. Well, all of it. And I had to free up some capital. So now we have 10,000. When we get a correction, if we get a correction, maybe we never get it. That 10,000 is either going to collect 5% in Robinhood, or it's going to be deployed somewhere else. Now, what did I buy? I bought 2 call debit spreads of the girl I shouldn't be messing with, but I keep on messing with her. PayPal. I reduced the average on these calls. Now, if PayPal gets like 75-ish, I break even. I bought another one. I just didn't screenshot it here. So I bought 2 of these guys, $255 a pop. Now my average on these spreads is about 517. Look, like PayPal is stupid at this valuation. The company is up, I think, 3% today because they've officially started buying back their stock. They're going to be buying $1 billion plus every quarter. We'll talk about Palantir in a second. Palantir at 25.08, but PayPal up 2% on the day. I just feel like at this point, if you're buying back 7% of the company, along with, the moat that I do think PayPal has, I think they're going to be fine. Now, their guidance wasn't amazing, but do they deserve to be at $60? No, they don't deserve to have the similar market cap to Palantir. It doesn't make sense to me in the context of what's happening for PayPal. So average down on those. PayPal position is probably officially built out, and now we're either going to ride into the sunset, or we're going to, go in the fire of flames based on what happens over the next 6 months. But I think as long as the market rebounds after we get a bit of a correction into that August time, PayPal should be closer to $85, and we should make some decent money off that. But that's what I did with my portfolio. Freed up a good 10 grand, put about $500 more into PayPal, and those were the changes. For today. So that's what we did today. Let me know in the chat if you've done any changes. Kelly says, I told him it last night that I never use Google anymore, and today he sells his whole position. No, but that wasn't the reason. The reason was really like, I am very scared holding some of these stocks right now. This does not feel at all that this is this does not feel like this is a meaningful run. This rally feels ridiculous. I mean, look at the S&P right now. The S&P actually is negative on the day at 500, and you've got stocks that are going to the moon. Enphase should not be up 5%. For some reason, Enphase is up 5%. Bitcoin, 50,000. That's amazing. We'll talk about that more in a second. CleanSpark's up 15%. That makes sense to me, given that Bitcoin's up. I mean, CleanSpark's $16. That's incredible. But Nvda, now it's starting to come down a little bit. Nvda was at 750. Now it's at 723. I mean, like, does this make any sense? SMCI got a price target raise to $925 today. It's up 5% on the day, added $35, added another $3 billion in market cap. Does that make sense? Not really. Not really at all. If there is any hint of demand collapse or inventory supply increases, this is not going to be sustainable, dude. This feels a lot like November 2021. And like the common argument is, well, there's so many, there's so much, there's real numbers, there's demand, there's like real, this is not just, it's not zero interest rate phenomenon. I get it. Which is why I don't think we're like collapsing like we did in 2022, where like, companies fall 80%. But to imagine we don't see 5 or 7% down from here after a run that is up 50% year to date in the context of Nvidia, SMCI almost 200% year to date. I mean, I don't know. It would be hard to just imagine that that's going to just keep going. So it is a bit scary right now with what we see in the market. And I think just having some capital with your least conviction stocks is okay. Now, Palantir, high conviction, and that high conviction is paying off right now, $25.03. We'll talk about them even more after the market close. But it's up 2.64% on the day. The volume was there. Palantir volume 102 million. Now, that 102 million, let's be honest, it is down from where it was last week. Last week, we had the lowest was 150 million. So today, we're going to end around 102 million. So we are seeing volume die off, but there is enough buy-side pressure against the sell-side pressure to keep the stock afloat. Inflow had 528 million today. Outflow at 555 million. Palantir up 2.71% on the day. So it did have enough momentum to keep it going. We'll see if this is sustainable. It's barely held 25. At one point, we got to 25.50, and then we sharply came right back down to 24.70. But there is enough appetite for these shares in that $24 range. But we're going to see, how long that lasts. And if that can continue to stay up, that's great. I have a feeling that if Nvidia takes a shit and SMCI takes a shit, which could happen, Palantir is going to take a shit. Now, if Nvidia crushes earnings and they go up to 900, then Palantir is probably going to 30. But it's going to take a couple weeks for us to see, how this ends up happening. 24 looks like how 14 did when we would dip below and buy back. Yeah, I agree. It looks like that as well. Why is AMD not going up? So AMD was up about 3% in the beginning of the day, but then it came down. AMD, yeah, it's down for today, down about. So because the S&P fell, you see this S&P at 500, we were at 503. So the S&P pretty much took a nosedive at around 2 p.m. And that's where I started, also getting a little scared. That's just like, the market just can't go up forever. You're not going to see an S&P that just goes to 510. I mean, if the S&P hits 510, guys, we are at every analyst's Wall Street estimate for the end of 2024 in 30 trading days. Like, it doesn't take a genius to be like, you know what, maybe that's a little too fast, dude. Like, maybe that's a little too quick. And maybe we need to take a little bit of a breather before we just keep going that quick. And that's why I got a bit scared today as well in terms of seeing what happened. CPI expectations, we'll talk about that. I'm going to pull up some bank numbers. I think we'll get to 3.1. I think 3.1 is reasonable, maybe 3.2. But if CPI is good tomorrow as well, we might have a little bit more of an inflated market if those expectations come in lower. But I think the market might be pricing in that, CPI is good, which is why we've run up so much as well. All right, Monday, February 12th, 4 p.m. The stock market is now closed. Ladies and gentlemen, we have officially closed on Palantir above $25 a share. Not bad at all seeing Palantir over $25. Absolutely incredible momentum here on Palantir. Now, granted, is it sustainable? I have no clue. We'll see what happens. But Palantir here is at $25. And for those that were shorting it or had puts, you're not doing so good yet. Maybe you'll do good in the next coming weeks. It's very possible. But at least for today, the bulls are victorious, seeing Palantir above $25. I did buy a couple shares just to keep the momentum going at $24.99. I tweeted that as well. If you're not following me on Twitter, make sure you follow me on Twitter. I'll put it in the chat right now. And hopefully that $24.99 sale got us at $25. David says, any concerns with Vlad selling 250,000 shares back on February 8th? This was a scheduled sale, and he has 51 million shares remaining in his Class B. Sorry, 55 million in his Class B shares. So a lot of people think that he's selling a lot. He has a lot of shares. So he has a lot of shares. So him 250,000 is just not that big of a deal, when he has 55 million left. All right, SMCI ends the day at 775, up 4% on the day. PayPal, $60, 2% on the day. Robinhood, we'll talk about them, 4%, $12 on the day. Tesla, or $12, 4% on the day. Tesla is down 2.8% on the day. We'll talk about Elon as well. It is unfathomable what Elon is doing to Tesla right now. It's quite insane, quite frankly, how Elon is acting. But Elon's behavior, I think, has led on one of the most green days of the market for Tesla to, of course, be down 2%. Alibaba up about 2% on the day. Enphase 128 up 5.25%. ASML is down about 2% on the day. SoFi got some love, up 2.46%. Nvda up about 0.16%. So it came back down. Nvidia was up almost 3% on the day, and then it came down. CleanSpark 15.99 after hours, up 14% on the day. And then we got Bitcoin. Look how beautiful that looks. Look how beautiful that looks on Bitcoin. Bitcoin is at $50,000 right now. It's been a while since it happened. I mean, really, this hasn't happened since what, April, May 2022? It's been 2021. It's been a while. So that momentum in Bitcoin, if we go to the crypto stocks right here, that's why crypto was green. MicroStrategy, wow, I did not see this. This is how crazy some of these crypto stocks are. MicroStrategy was $702 in the beginning of the year, January 2nd. It fell to like $470 a week ago. Now it's at $717. It's higher than what it was on January 2nd, dude. It's just insane. It's just insane. MicroStrategy is up now that Bitcoin is up. CleanSpark is up. Coinbase is up 147. Robinhood is up 4%. Bitfarms was up 12.87% on the day. All the miners did really well today. Marathon is up 14%. Marathon was $16. Now it's at 27. A lot of the fundamentals don't really matter on some of these mining companies because once Bitcoin goes up, the rest of these companies seem to follow with it. CleanSpark is my bet. CleanSpark options are doing very well today as that one continues to go higher. But that is what we're seeing in the context of Bitcoin. Doug says, I bought a ton of MicroStrategy at 490. Well, great for you, Doug. That was a good buy. That's when Bitcoin was at 38,000 and people were getting very scared. Seems like that 38K was a really good dip to buy on Bitcoin. I mean, we'll see, but I don't know what the catalyst is to tank this back to 38K. As you can see, Mag 7 is pretty much all red. Pretty much all of it. Meta is the only one that maintained some of its green. The rest of these guys fell today. Microsoft as well, 415, down about 1.26%. Google now at 148. So I basically sold Google at 149. So if it goes above 149, it wasn't the best sell. If it stays below 149, it was a good sell. And again, my justification is even if it goes to 155, 160, whatever, which if that happens, that means the entire market would have to move. Like Google's not a company that just goes up by itself and on a little island while the rest of the market is tanking. Like if Google goes to 160, 170, S&P has got to be closer to, I would say, 510, 520, which are those end of year targets. So I actually think this was a really good sell on Google, quite frankly. But we'll see. I could be wrong on that. But I think it made sense at this point to at least take some gains on Google. Coinbase is up, Square is up, PayPal is up, Affirm is up, SoFi is up, Robinhood is up. We'll talk about a bunch of these stocks along with Bitcoin and Palantir. Let's get an update on Nvda and how we should be thinking of Nvidia's run right now. We'll also talk about Shopify because they have earnings tomorrow as well. Here we go.
Oblivious to, look, Nvidia continues to amaze us. What else do you say? It's almost $740. It was just crossed 700. Now it's 740. It seemingly goes up all the time. We mentioned ARM Holdings was up 40% today. Yeah, it's a tiny float. And who knows what other reasons it continues to go up. It's just an unbelievable path. By the way, Nvidia's market cap today passed Amazon's. It's the first time, according to some reports, that's happened in 2 decades. So
last time that happened was 2002 when Nvidia was more valuable than Amazon, and that was when both companies were below a $6 billion market cap. Today, they are both racing for $2 trillion, and Nvidia, which is going to do close to $70 billion in revenue. Amazon doing about $560 billion in revenue is now more valuable than Amazon.
So we asked Christina Partsenevelos to come sit with us today and just take us through. This is incredible. you cover the space. I mean, you look at it. I wonder what goes through your mind as you follow this. Jensen Huang's over. He's in the Middle East today.
Yeah, in Dubai.
Was making some comments. And it's just insane.
His comments in the Middle East, though, were focused on just AI in general because they're in their quiet period, and he's been pushing infrastructure. He said that they see about $1 trillion in accelerator market right now, and that could go up to $2 trillion. So keeping costs in check, but that's pretty much telling you there's going to be growth in 2025. So that's seen as a positive. To your point, Scott, and we're going to go over to just some of the reasons. You've seen the stock, soar 53% just this year alone after rising 240% last year, much of that happening more so in the second half of the year. So to answer your question, why is everybody still so bullish on this name? First, talk about the big cloud companies, Meta, Microsoft, Alphabet, et cetera, Amazon, all promising to increase their capital expenditures. That means they're spending more money on GPUs. Nvda benefits. Secondly, Nvidia is launching a new AI chip later this year, the B100, so that should help propel some momentum. Nvidia also created I'm calling it a safe for China version AI chip, and is reportedly taking orders right now, so that's keeping that 20% revenue pot intact. And then lastly, Nvidia's software and enterprise business. We don't talk about it enough, but it's still nascent, still in the beginning stages. And this has led analysts, to your point, you're talking about point increases, price targets. Melius Research today, $920. The stock is $738 right now.
That's got to be the high now on the street, because wasn't it like a week ago we got, I think it was Goldman went up to 8?
Yeah, I think I have that actually on the chart. So Goldman, JP Morgan, several of them have gone up within the $750, $800 range, but $920.
Now we've crossed the 900.
When are we going to hit 1,000, guys? When are we going to hit 1,000? But the interesting point is the share price actually surpassing right now the average analyst price target for the first time in 2 years. There are, and I just want to, we have to talk about the negatives, right?
Yeah.
Wolf, JP Morgan, a few are raising some concerns. Perceived, right? Supply is coming back online, which means that lead times would shrink. Competition ramping up not only in China from Huawei, but the custom chips, that's probably more of a long-term problem, but made in-house by Google, Meta. And then the obvious, Scott, the bar is so high for this company. So this.
And we'll get back to that clip in a little bit, but that's the thing I wanted to point out, is that the bar is so high for Nvidia. I mean, like this is a bar where you don't have to be 21 years old to get into. I mean, you got to be 2,100 years old to get into this bar. Okay, that's how high the bar is to get into. Because if Nvidia wants to justify this multiple, which again is not necessarily expensive, and let me show you a post for why it's not necessarily expensive. But if they want to justify this, they've got to put up some big daddy numbers tomorrow, some real big daddy numbers. Not tomorrow, on February 21st. And the question is, are they going to be able to do it? So here's Alex, ticker symbol U. He's been holding Nvidia for a very long time. And here's what he had to say about Nvidia. So opinion, Nvidia is expensive. Fact, the last time Nvidia had this PE was over a year ago, and earnings have skyrocketed every quarter since. Result, Nvidia is even cheaper now because earnings grew much faster than the price. And that's the argument he's making. So the PE, when Nvidia was in, July 2023, was at 246. The PE has been basically cut in half, more than cut in half, right here at 96, given the growth of the company. So, I mean, this is what happens with price to earnings. This is why it's really hard to look at it. Amazon has always had a ridiculous price to earnings, but if you use that as the fundamental justification for investing in the company, you probably would have never invested because it's always overvalued. But as they grow, as they reduce CapEx, as they increase operating margins, and as that free cash flow goes up the wazoo by increasing the retail margins on the e-commerce business, then, the PE starts to come down. Same thing with Nvidia, except for them, it's just straight top line growth. And they're doing 178% year-over-year revenue growth off of a high base, 6-7 billion a year. And that's growing to close to 13-14 billion a year. I think this quarter they're expected to do 21 billion in revenue, something like that. And so this is very exciting, obviously. But the question is, has the street given too much of is the street front running too much of the results by basically giving them the valuation exceeding all price targets on the street before they actually put up the numbers? And if any of those numbers have a little bit of a doubt, a little bit of a scary sign to them, what's going to end up happening to Nvidia? I think that's where the market is basically pricing Nvidia at right now. CPI expectations, here we go. Where's CPI expectations? Okay. So wow. Headline CPI. Oh, this is interesting. Look at these. All these banks have them at 2.9. Wow. That's going to be interesting. I did not know the banks were this bullish on CPI. I thought the banks were a little bearish. I thought the banks were thinking it's going to be 3.1 or something like that. That's interesting. So 2.9, Barclays has it at 3, Goldman Sachs has it at 3. TD Securities has it at 3. Everyone else is 2.9. Headline last month was 3.3. Remember, it got revised down about 0.1% from 3.4 because they like fixed some of the numbers. So now they're at 3.3. 3.3 down to 2.9 would be pretty damn bullish if that ends up happening. Core as well is at 3.8. Previous month was 3.9 on core, so that will be down 0.1%. Headline will be down at 2.9. If we get it down to 2.9, I think the street's going to be very happy. The question is, is the street going to be able to justify, in my opinion, the momentum that we see in the context of what's going on there. So let me go to some of these other names as well. So we got Alibaba at 73 right now, Bitcoin at 50,230, PayPal at 60, SoFi at 833, S&P at 500 right now. If that inflation report comes down to 2.9, it's going to be super, super interesting to see if that S&P number just explodes out the wazoo, gets to 505. If we see that, that's going to be really interesting. Let's go to Dan Ives on Apple, and then we'll talk a little bit more on macro. He was on CNBC today saying that Apple's getting to 4 trillion, and that's likely going to happen. Here we go.
Checks or and like. I'd just like to know, how accurate have they been in the past? Because obviously you put a lot of credence in them to say business is stabilizing, if not actually perhaps will grow next year in China.
I think the last few years we've been more accurate than not relative to the demand environment that we've seen. I think for this, there's a lot of noise in Apple. And I think even when you look at this last quarter, and our call here is that you look at iPhone demand in China, it's actually stabilized. We even think increasing from a Lunar New Year perspective. And when I look at the supply chain checks, we are not seeing major cuts. And I think this is something as we go through the next few months, it's going to prove that the March guidance that they gave in terms of Cupertino will be conservative. And it's a Super Bowl moment. This is the lead up to AI, not just on, as we talk about the AI App Store, but we believe from a memory perspective, we're hearing across supply chain more and more memory, which I believe is going to be AI coming to iPhone 16.
Right. Back to China market share. I mean, we've heard a lot about, obviously, renewed competition from the likes of Huawei. We've heard certain stories that indicate the government is encouraging, if not telling employees not to own iPhones. Are those real, or are those imagined, those potential headwinds?
Look, I'm not saying roses and champagne for Apple in Beijing, but we are seeing actually pretty strong from an install base perspective. Right now, over 200 million iPhones. And from a demand perspective, they've actually gained 300 bips of market share the last 18 months. So our whole call here is that you got to, and the reason we put so much work in, you got to navigate the noise. And the reason the stock's up from where it was after that quarter is because streets recognizing the AI revolution is now coming to Cupertino. And I think when you look at that install base, 2.2 billion iOS device, it's going to be on the App Store. We talk about the AI App Store coming in June. And then ultimately AI, LLMs, in terms of from a hardware perspective, that are going to come to iPhone 16.
So it's going to show up in which parts? In revenue, monetization,
so it's
services?
First, the services, that's the golden goose, because that's really where we believe 5-7 billion incrementally just to start per year. Developers are going to continue to go to Apple. That's where they're going to build generative AI. And I think even what you're seeing on Vision Pro, it's just the tip of the iceberg. So what I view is the AI revolution now coming to Apple. And as we've talked about, definitely been, of course, godfather of AI, Jensen, Nvda, Microsoft, and Redmond. But now the AI, that party will be coming to Cupertino.
Now, one of the things about Apple that's getting really exciting is two areas, and that's what I think Dan is talking about. Number one is obviously this AI App Store. That basically means that the iPhone 16, the next big upgrade, the reason you're going to want to buy it is because there's going to be LLMs integrated throughout the entire hardware of the phone. I don't know why that can't necessarily be a software update. Maybe you need some very specific chips in order to be able to do that, and that's what Apple's working on. And that's what Dan Ives' research is suggesting that's what they're working on. But in general, that's something exciting, and that's a reason for how you can interact with your iPhone, probably more through a natural language processing infrastructure or interface versus just clicking on apps and buttons. That deepens Apple's moat, makes an upgrade cycle more likely. The second is the Vision Pro. So apparently the Vision Pro is actually very popular. It's actually funny because I'm seeing mixed reviews, even though I'm seeing more people are generally excited than not. Our good friend Farzad, we're going to have him on the channel later this week to talk about Tesla. He is actually returning his Vision Pro. And he made a post today for why he's returning the Vision Pro. And the main reason for it was that he can't find the real use case to justify spending that $4,000. It's still heavy. There's not enough native apps. I mean, there's all the same problems that should be in a Gen 1 product. It's just that a Gen 1 product usually doesn't cost $5,000, $4,000. And so the Gen 2 product, hopefully costing anywhere from $1,500 to $2,000, would be a lot more easier for the average person to check out. But I mean, it does make sense to return it if you don't think you're going to use it every day. So there's mixed reviews like that. And then there's a lot of other people that are just like, no, it's going to be amazing. They love using spatial computing, and it's not, in my opinion, it's going to be hard to justify where the value of it is every single day. So some people like it, some people don't. I think inevitably Apple's going to figure out how to make the Vision Pro reasonably available to all consumers. The question is, when does that happen? Dan thinks that happens by the end of next year, and that's why he's got this $4 trillion price target on Apple in terms of market cap. Bitcoin right now, 50,271. So Bitcoin is not just at 50,000; it is superseding $50,000. We got to a high of 50,361. If we can start making a real run on Bitcoin, this is going to be a very interesting next couple months. CleanSpark is up 1% after hours, $16.14. What would be really interesting is if large caps take a break, IWM, small caps, as you can see, the Russell is up $202 at 1.82% today, start taking off. And then crypto, along with crypto stocks, start taking off while the Googles, Microsoft, Amazon, Apples, Nvidias take a break. I mean, that to me is not that crazy of a scenario happening. That's exactly what Tom Lee predicted. It's just we've had this melt up since then because the earnings have been so good. But even though we've had good earnings, it's like, is it justified to have those types of earnings and still have the market caps that we're seeing on a lot of these companies? I don't know. I don't know if that's justified. And as a result of that, we're seeing a little bit of pressure right now on a lot of these companies in terms of where they're going to be able to go. So IWM breaking out is really exciting. We'll talk about Robinhood in a second. CleanSpark is up. Bitcoin is up. Now, in general, if we see a broader market pullback and Bitcoin retains its momentum, then it's really going to get exciting, because then you're going to have the crypto folks saying, see, we told you, if you can't just keep printing all this money and expect for these assets to go up in value when you have this type of inflation, even though inflation is coming down. So hopefully that should, push back against that. If Bitcoin keeps going up, then, Bitcoin will be a hedge against that, even though Bitcoin moves with the NASDAQ. Like when the NASDAQ tanked in 2022, Bitcoin tanked with it. So it'll be interesting to see how it ends up playing out. I think Apple and Google have the least amount of direction in the Mag 7. That's what Thomas says. That's an interesting question. Put that in the chat. What do you think? Which one out of the Mag 7, if you had to pick two out of the 7 out of the Mag 7 have the least direction? I think Apple has a decent amount of direction. Quite frankly, it's just they're in the first generation of the Vision Pro, and it's very hard for us to justify that it's going to easily be resolved. Google, I would say, has the least direction in my opinion, which is why I sold all my Google today. Got to raise cash, and we got to get rid of some of the losers that I don't think have the best pitch to investors right now. Someone showed me a clip today of Peter Thiel bad-mouthing Google. And I remember I did a whole video on that a while ago in like May of 2023. Peter Thiel looked Eric Schmidt in his face, that's the former CEO, and said, you guys don't innovate. And he was right. Like, he was so right. 2012, he said, you guys have so much cash, you don't know what to do with it. You don't innovate because you're relying on search. And it's like, think of the conundrum Google's in right now. They have not done a single thing other than optimize their search business. Like, all their moonshots pretty much ended up failing, right? And like, now they're just kind of here, saying, hey, can you keep using our search engine? It's like, yeah, people will keep using it, but for how long? And again, that's not super bearish Google. It's just that proves the lack of direction in that company is scary to hold at a time where the market's at all-time high. It's not easy to be hold. I would rather hold Meta when the market's at all-time high because I know they have a real direction. They're at least trying to do some stuff. Google, I don't know. Yeah, John showed that clip. John showed that clip as well. Okay, let's take a look at Goldman Sachs thinking about how many rate cuts we're going to get this year. They think we're going to get 5 of them. If we do, market's probably got a lot more room to run, and then we'll keep talking, and we'll do a Robinhood preview for tomorrow.
Investors should stick with that trade despite those outsized returns. Here at Post 9, Sarah Nason-Tarahana of Goldman Sachs Private Wealth. Nice to have you back.
Great to be back. Thanks for having me.
Of course. So I just had a conversation I hope you heard with a couple people pretty bullish.
Yeah.
Is that that's where the trend is here?
Yeah, look, I'm constructive. I don't think I'm expecting the type of returns that I expected when I was here with you in November.
Well, with the gain since then, S&P's up 15, and the these are percent, and the Nasdaq's up 17.5% since you were last here in November, and we're pretty positive.
So I'm constructive. I think, the economic data is strong. Earnings have been strong with 67% of companies having reported, 57% having beat. That's, the average beating is below 50%, typically more like 48%. So I think the economic data and the earnings are supportive. And I think, our perspective on inflation is it's continued to wane. These are all things that are pretty supportive for the equity markets generally.
Has the easy money, so to speak, been made since November 1st? Is it going to get a little tougher, or perhaps not? Or how would you answer that?
So I think it will get a little bit tougher. I mean, if you look at our kind of global investment research target, it's 5,100. We're pretty much right there. I think there's some upside risk to that number.
Everybody keeps bumping their numbers up.
But I do think it's going to get a little bit more challenging. I think we're looking outside. By the way, my view is to stay long the Magnificent Seven, in part because, I work with typically taxable investors, right? And so those taxable investors have realized huge gains.
Oh, they don't want to pay taxes.
I don't want to bet against those stocks. I think, it's important to have large cap allocation in a core portfolio, but we're looking a lot more to things like small cap. I mean,
See, it's everyone, dude. Everyone is thinking it's time for a different class of investments to take off. And it seems like Goldman Sachs feels the same. We'll let her talk for 30 seconds, then we'll move on.
Numbers are definitely supportive of more cyclical stocks. If you really think rates are coming in, which I do, those companies have a lot more floating rate debt, and their valuations were still 20% off the November 21 highs versus, S&P reaching a new high every day.
Yeah.
So that broadening of the market is something, I believe in. And then, the valuation supports it too. They're trading, Russell 2000 is trading at 2 times book versus its average historically of 2.2.
And that was Tom Lee's argument going into the year. Look, I think she's right on small caps. The question is, here's the question. Here's the real big question when it comes to small caps. Is the market going to overlook the fact that small caps don't have the best earnings? Because a lot of them are not profitable. A lot of them are, quite frankly, not as innovative as, large cap tech, even though large cap tech is not the most innovative, but they have enough money to do buybacks and subsidize a lot of projects that they're working on, and obviously continue to scale their core businesses. But none of the small caps are as innovative as something like Tesla, right? So if you're buying the small caps, you're buying it for a cyclical reason. You're not really buying it for, in my opinion, anything fundamental, unless there's certain equities in those small caps that are interesting. And so that's the question. It seems like investors have chosen large caps because large caps have actually proven value, whereas small caps really haven't done it in the way that investors wanted it. This is a nice little chart that is kind of what some people are saying will happen to Nvda. So this is Cisco's market cap in 2000. As you can see, it went all the way up to basically 550 billion, and it came falling all the way down, and it hasn't recovered since then. Ticker symbol U posted a great picture talking about when he would sell Nvidia, and this was his rationale. His rationale was this is what he would do. He would sell Nvidia at 1,200 if we got there, and he would rebuy under 400. It looks kind of similar. It's hard to deny the similarity of that. But, the argument against Nvidia being a Cisco is that Cisco is nowhere near the type of company Nvidia is in the context of GPUs and AI, accelerated computing, yada, yada, yada. I mean, there's all those arguments for why Nvidia is probably going to just keep doing what it needs to do. The question becomes, is the demand and the inventory supplies enough for Nvidia to just say, this valuation actually truly is cheap, and for Wall Street to get behind it? So far, they've been able to do a good job. And February 21st, I mean, that's the day you got to book on your calendars. There's either going to be a reckoning to the upside or a reckoning to the downside on Nvidia. It's going to be very exciting to see, but it's going to be scary. Olu says we're in greed mode. I would agree, dude. We're in super greed mode. Do you think Palantir is similar to Cisco? Not really, because Palantir, you could say Palantir is a bit overvalued right now, but Palantir is not, $500 billion. If Palantir was $500 billion market cap or anywhere near $100 billion, I would say, yeah, it's coming down. At 50, when Snowflake's at 70, it's a little much, but I don't think it's insane. But I do think it is a little much. But it's not Cisco, right? Nvidia is something that has capitalized the entire street's attention, and it seems like this is just the trade of the decade, and that's what the street has allocated the capital into. Meet Kevin's fund, PP, is up 1% of the day. This is so interesting on Meet Kevin's fund. He has a crap ton of semis. This thing should be up year to date. How much is it up? I mean, it should be up a lot. It's probably up like 5% year to date. Meet Kevin's ETF is up Yeah, it's barely up. It's up 0.85%. It should probably up. It should be up like close to 12%. But the problem is with all those semis, he has two companies that are screwing up the ETF, which is Tesla and Enphase. And so although he's overweight Nvidia, AMD, ASML, all those good companies that have just had a phenomenal year, SMH, the semis ETF that tracks all these guys, is up about 18% year to date. That's an ETF, not a stock. That is up 18% year to date. The problem is he has all that Tesla and Enphase, and that's what's screwing him up. Enphase right now is at 128. I don't think being up 5.25% is reasonable. That earnings was disgusting. The earnings call, maybe Baudry said something that made people excited, but that to me is just the market trying to front run before rates get cut and trying to get in front of it, which is fine. It's just, I don't think rates are getting cut until like June or July. So I don't know how quickly that happens. Now, maybe if we get 2.7, 2.5 on inflation before then, the Fed will think of it. But again, why does the Fed need to cut? Unemployment's great. Jobs are great. So, the economy is doing fine. There's nothing, the inflation's coming down. Like there's no real reason. If they would do it, it would actually be scary for inflation for the Fed to be able to cut that quickly. And then we have Tesla at 187. Let's do the Tesla segment right now, and then we'll talk about Robinhood and let's discuss what Elon Musk has been saying today. So I'm curious from the chat if you think Elon doing this, what I'm about to show you, him tweeting today, is actually good or bad for Tesla. I'm very curious what people think, or if you think it has no effect. And then we'll do Robinhood right after this. Jeremy, so 60 would be $100 billion market cap. It would be 120. Take every stock price on Palantir and multiply by 2, basically 2.1. And that's your market cap. So 60, we have a 2.1 billion shares outstanding. That would be close to $125 billion market cap. So at 25, we're at a $55 billion market cap, which is a lot. Is it justified? I don't really know. All I know is that the street wants AI, and Palantir put up some decent numbers, not phenomenal numbers, but pretty damn good numbers. And that is why the street is continuing to give them the premium. But that either goes away or it doesn't go away based on what Nvidia does. Okay. Elon tweeted this today. He pinned it to his profile, so I don't even have to search for it. He tweeted a picture with the caption, "D's nuts." And he took the Mickey Mouse Disney ears and he flipped it upside down. And as you can see, it looks like, well, this is a family show, so I'm not going to say. So this is says it's a family show, but then curses every 5 minutes. I'm sorry, but this is what Elon tweeted. Okay, so here's my question for everyone in the chat. Here's the question: is this good for Tesla stock, bad for Tesla stock, or has no impact on Tesla stock? What do you think? That is my fundamental question right here. Is this good or bad? Because I would think as a Tesla shareholder, this is starting to get a bit ridiculous. This is just, look at this. You got Tesla Boomer Mommer. Oh my God, these Tesla influencers, dude, they are insane. How are you typing hearts underneath? You are insane, dude. These Tesla influencers are absolutely ridiculous. This is the crazy, let me stand up for my finance junkie, Chris. Chris called this woman out and said all she does is, well, she can't say anything wrong about Elon. And I think this is what you're seeing right here. This is what you're seeing. This is what you're seeing. These Tesla influencers have no shame. It's really sad sometimes, quite frankly. Now here's my opinion. I don't care that Elon tweeted this. It's actually kind of funny. It's cool. But the fact that these Tesla influencers think, oh, the hearts, are you kidding me? Heart emojis? You got to be ridiculous right now. Heart emojis under someone who has a $500 billion company flipping the Disney logo around saying D's nuts? Come on, dude. Come on. Get out of here. Get out of here. This is why I'm so happy about the Palantir community. I think at some level we can be objective, whereas some of these guys can't be objective at all. I mean, some of these guys just can't be objective at all. This is insane. And I like Tesla. I love Elon. I don't care that he tweeted that. Quite my opinion is that it's whatever. I don't really care. But dude, like at some point, you got to stop tweeting about illegal immigrants. You got to stop tweeting about Disney. You got to stop tweeting about wokeness. Like, why don't you just run your company? Like, is this really what he does all day? This is the fun he likes to have. Look, it's fun content and it's cool to analyze, but it's not. To me, it's not the right thing that he should be doing if he's an actual CEO. Sonny says bad for Elon and his 1,000 endeavors like Tesla. I agree. No long-term impact. I agree. Probably no long-term impact, but it's just stupid. It's just stupid at some level for him to be doing that. You know, and look, Elon defies gravity. Elon goes against the wind. Elon is Elon. He is the guy who, you know, is when Tesla stock is at $1 trillion, no one's really going to care about this. But in the short term, it's okay to criticize someone doing that. It's okay to criticize his LGBTQ conspiracy theories. But these Tesla influencers would never do that because they're in love with Tesla. That's it. You know? And it is a little weird. It is a little weird for them to be doing that. Elon's mission is far bigger than Tesla. Yeah, sure. I get it. But at the end of the day, I don't know, dude. And this is actually a contrary opinion from me because usually I'm the one who's like, oh, that's funny. That's cool. It's whatever. But at some point, it's just like, I don't know why he keeps tweeting this type of stuff. I don't know what he wants to do. He's been like this, but the Tesla influencers are cringe. I agree. It's really sad, dude. Like I've called out Karp many times when he said we weren't going to be profitable till 2025. Like I've said, like I even called him out on the AIP conference when he was like, they did some interview with him and he was rambling like crazy, dude. Like there was not a single cohesive sentence. It sounded like he just like didn't know what he was talking about. I remember that in September 2023. But with Elon, I mean, it's like you can't say anything wrong. Is this real? Yeah, this is stupid, dude. This is stupid. And again, I'm an Elon fan. I don't want to get it the wrong way. I'm an Elon fan. I love Elon, love Tesla. It is very hilarious to me when a lot of Tesla influencers think that everything he does is just funny versus like actually like, hey, maybe he probably shouldn't be tweeting some of this type of stuff. Okay, let's talk about Robinhood. They have earnings tomorrow. We got to discuss them. They're up 5% on the day. And I think it's probably important to discuss Robinhood as well. Okay, so Robinhood, I think they're gonna have a pretty good earnings tomorrow. The reason I think they're gonna have a good earnings is because I think their assets under management are going to explode. Those assets under management are going to explode for one main reason. They have been giving people a lot of money to come to the platform, and as a result of that, I think the core metric the street's going to look for is assets under management. On top of that, I believe they're going to be able to increase ARPU. The reason for this is because Robinhood has consistently increased ARPU every single quarter since it bottomed out at about $51 5 quarters ago. Now it's at $80. If we get to Q2 2021 levels, it'll be at $121. I think we're probably going to get somewhere close to like $90-ish when it comes to Robinhood in terms of their financials. On top of that, I think that their assets under custody are massively going to go up. The reason their assets under custody are going to go up is because we've obviously had a bull market. Bitcoin, they have $3 billion worth of Bitcoin on their balance sheet. And so that's going to go up as well. Assets under custody last quarter were 87 billion. I think that's going to be closer to 100 billion. Gold subscribers were 1.33 million. That's probably going to be close to 1.4 million. If that number comes in at 1.5, that's going to be really good. That's $7 a month straight cash. So almost 100% margin for them. And then net cumulative of funded accounts, because they expanded to the EU and to the UK, I think that should go from 23.3 to closer to 23.7, 23.8. And if we get those numbers, I think the street's going to be very excited about that as well. Now, net deposits, this is the number that should explode next quarter. They're at 4 billion every single quarter. That number should be closer to like 6 or 7 billion. And if that happens, that's when the street's going to be like, holy crap, a lot of people are bringing their money onto Robinhood. And if that's the case, net revenue should go up. Adjusted EBITDA should go up. Net income, are they going to be profitable? If Vlad can somehow squeeze it out of the company, then yes, that would be amazing. They're probably not going to be profitable because they're paying so much money to get all this money on their balance sheets in terms of, or on their assets in terms of paying people the 1% match or the 3% match in the Roth IRA. So I don't think they're going to be profitable. That's me being not very conservative. I think reasonably conservative. But if they are profitable, I think the street's going to be really happy because their guidance is going to be great. This year is probably going to go good for Robinhood. They're going to be adding more and more accounts. They're expanding crazily. They added the new feature today. I'll show you guys, but it's a new feature where you can see how hedge funds and insiders are buying or selling the stock, which is really cool to have it centralized in one spot. And as a result of that, that ARPU should go higher. Net deposits should go higher. And total net revenues, I think, should be closer to that 35 to 40% year-over-year growth. And Robinhood's going to end up doing well. Robinhood is doing 1% on deposits. How do they afford to give away so much money? So this is how they do it. You bring your money to Robinhood, right? Let's say you bring $500,000 and they give you 1% on that. They take the $5 billion they have in cash and they get short-term treasury income off of it. They get about 260 million off that $5 billion. That money, they disperse it to you for giving your money to the platform. On top of that, let's say you bring your 500,000 and you have 300,000 of that money that's uninvested. They're going to take your 300,000. They're going to give it to their partner banks. Their partner banks they have a network of banks. They give it to. Those banks give them a commission for bringing them the money, and those banks then invest that money, but they give an APY, which is at this point for gold numbers 5%, on your capital, which is how Robinhood takes that APY and then pays out the end consumer that brought over their brokerage. As a result of that, the user gets APY and they get a match. Robinhood gets more assets under management and they get higher earnings from the fees they get for giving to their partner banks. And then second of all, those assets under management, they can use a product called Cash Sweep where they can basically put that money into different assets and make money off that on the back end as well. More money on the platform just means Robinhood becomes a better product, a more secure product, and a larger product for individual investors to end up engaging in. That has been my thesis since the stock was $9 when I heavily started buying. And as a result of that, I think that it's going to end up doing well. It's going to be hard to see the stock go down back to that $7, $8 range. I don't think that happens. If that does happen, that's a great opportunity at DCA. But I think at that point, the risk is gone. I could be wrong about that. But that is my bet that I'm making on Robinhood right now. And as you can see, Robinhood is up 4% of the day. Now, another reason why Robinhood's up is because Bitcoin's at 50,000. Bitcoin could not have had a better time to go to 50,000 because the thing about Robinhood is that if they tank on the fintech narrative, this is why I sold half my calls on Friday because I was a bit afraid that Affirm went up before earnings, they tanked. PayPal went up before earnings, they tanked because one or two metrics, the street gets upset and they're like, you know what, we're just going to pull this money into Nvda and SMCI. We're going to take it out of fintech. Same thing happened with SoFi, even though they held on to their earnings for like about 2 hours. If Robinhood does tank, the thing that saves them is that Bitcoin's up and Robinhood moves with Bitcoin. If you look at their charts, they're almost identical. When Bitcoin goes down, Robinhood goes down. The dip from 1350 to 1038 was because Bitcoin went from 49,000 to 38,000. As Bitcoin has come back up, Robinhood has made its recovery. And whether it's justified or not, Robinhood trades with the Bitcoin. They have $3 billion of Bitcoin under custody. They're one of the second largest or the third largest brokerage in the world that has that much Bitcoin. And if they have more Bitcoin, they have more people trading it. It's the lowest fees in the world to buy Bitcoin. That creates a little bit of a floor to the stock, not being a traditional fintech, but being a crypto play. And if they have any level of good earnings, even if one or two metrics are bad, and Bitcoin's doing well tomorrow, then Wednesday is going to be a good day because Robinhood's going to go up. And it'll be really exciting to see it happen. But if it doesn't happen, then, we might see a little bit more downside to $7 or $8. Isn't that what SBF did? No. That's not what SBF did, guys. It's called Cash Sweep. Look it up. It's what a lot of these banks do. They take your money, they put it in different assets, and they take the return on that and they give it back to you as the end consumer. They also have FDIC insurance up to $2.5 million now. So let's say you have a $2.5 million account on Robinhood and all of it goes to shit somehow because Robinhood goes bankrupt. You're going to get that $2.5 million back. So before that used to be $250,000. So I mean, the risk to putting your money on Robinhood really has not been as high as it's been in the past couple of years. And now it's just a question of, if it can keep going higher. So that's my play. Tomorrow, I think Jesse will join me on the earnings. Either it's going to do well and it's going to be exciting, or it's going to go to shit and we're going to lose a lot of money. It'll be fun. It's the fun of investing. But we are really, really, really going to see how this ends up playing out and if this bad boy can keep its momentum going. So that's what we have on Robinhood. These new features are for gold only. Yeah, you have to be a gold member. And that's the thing, guys. Here's the thing. The reason I'm so excited about Robinhood is because the due diligence that I've been doing, just talking to people, like talking to some pretty high net worth individuals, like we're talking to people who have lots of money. They've brought their money onto Robinhood because 1% match. Why wouldn't you? Right? Like why would, if someone's giving you 1% for free or 3% for free, like you're going to put and the app is good. There's it's Schwab, Fidelity, Vanguard. All of these are just apps to trade stocks. There's nothing that's special between them at all. The thing about Robinhood that's special is that the UI, the interface, it actually is fun to trade on this stuff, right? Like it makes it a real unique product. It's like Spotify for music. Like people just like using that product for music, even though there's other music platforms. And half the market cap is cash. So when you put all that together, you start to just realize as long as they don't have declining MAUs or anything like that, the street should be fine with it. It's been depressed for 22 months at the $7 to $8 range. I think, whales have obviously been accumulating 75% institutional flow. It should be better than a lot of the other fintechs, but we'll see. Parker says, I've had like 400,000 in Robinhood and never had a problem. Yeah. I mean, a lot of people, I think, do the same. So it's going to be interesting. Explain how to get the 3% versus the 1%. So the 3% is for your 3% is for your rollover on the Roth or the traditional IRA or 401k. The 1% is if you just bring your entire brokerage. And I know people that have brought millions of dollars onto the platform that have gotten, tens of thousands of dollars of free money. I mean, even our boy Josh the other day, I remember I showed you guys this, if you remember, our boy Josh, who's big into SoFi, he took all of his money from Schwab and put that sucker on Robinhood. He put 1.6 million and he got $16,000 for doing nothing, just moving, and it was a quick thing. It took like 2 or 3 days, you know? So when you see stuff like this happening, you just start to wonder how many other people did it. And then if you look under the comments under his post, well, a lot of people did it. A lot of people. Look at that. 16,000 for doing nothing. That 16,000 Robinhood gave is a lot of money to acquire a customer, but he has to keep his money on the platform for 5 years, which means he's not leaving, and the app's going to get better and better and better, so he's not going to want to leave. And then on top of that, obviously any of his uninvested money, Robinhood can just, you know, put that into their cash product and make back the 16,000 that they paid to him. So it's going to be exciting. It's going to be exciting to see what happens, and hopefully it actually does well. But that's my thesis going into earnings, and either it's going to work or it's not going to work. And that's the fun of investing. It's we're either going to get an answer or we're not going to get an answer. But I do think there is a chance that it ends up doing well. And if it does do well, then, you know, we're going to see a lot more momentum on the stock. Here's another thing that I wanted to show everybody in regards to what we see going on. We talked about Bitcoin. We talked about a couple of other these things. Here's talking about double-digit earnings growth. Let's let it up a second, and then we'll keep going from here. She remains more bullish that earnings are going to be good. So here we go. Let's play this, and then we'll be back.
They've had some pretty good runs, some of those big names. You've actually been moving some money around in your portfolio. You actually sold some of the Meta Google. Why?
Well, I made a lot of money in Meta. I was up 150%, and I think it's prudent to take gains. Google, I had bought late last year, and I was up quickly at up 26%. So I sold those both. I still like them very much long term. If they were to pull back, I probably would add them back. But I think that there's more opportunity in Apple. I think it's really unloved right now. Only 60% of the sell side have buys on the stock. I thought they had a pretty decent quarter. When you have 16% earnings growth, you had 12% EBIT growth, 26% free cash flow. They have 173 billion in cash, and they're going to probably increase their buyback sometime in the spring. They usually do. And they're buying about 3% of their shares outstanding per year. And so I think we got the bad guide, past us for the March quarter. And I think the setup is a lot better. So I just think that there's better risk reward in a couple of different technology names versus the Meta and the Alphabet.
So I wanted to show that because she sold Google for the same reason I sold Google, which is that the valuation is not bad, but the current market conditions means that there's just other attractive opportunities. And Apple might be one of them versus Google, just given the sense that Apple at least have some innovative, dynamic to it in regards to AI Vision Pro, whereas Google has pretty much nothing. So that's why Google came down. All right, let's talk about Palantir to end this off, and we'll discuss everything that happened in Palantir today and what I am thinking about Palantir right now going forward. So Palantir defied all odds today. It's down a little bit after hours, but it has continued to maintain momentum right here at $24.74. Ended the day at 25.05, down about 1.24% after hours. Look, the thing on Palantir is that there is just appetite, it seems, for AI as long as Nvda is holding up. If Nvda tanks to 500, I would be very doubtful that Palantir can maintain $2,500. And maybe that's going to happen. Maybe that's not. But so far, we have not seen, this massive exodus out of Palantir, because I don't think we've seen the exodus in some of these other stocks like obviously like Nvidia. Now, the question is the volume enough to maintain the momentum? 107 million shares traded are the lowest it's been in the past 5 days. If that number keeps going down, then you're going to have a bit of a harder time to keep it going up because you just need volume when there's 2 billion shares outstanding in order for Palantir to be able to continue running. But I think investors have pretty much realized, look, if they want to be in the AI game, you got to have some Nvidia. You got to have some Palantir. You probably got to have a little bit of Tesla. You definitely need to have some Microsoft on the cloud side. And then, the rest of those stocks, it's a bucket of stocks that you can pick from. But to not have Palantir as a part of that bucket, I think institutional investors are realizing it's a mistake. And if it's a mistake, then it's going to be very, very tough to, recover from that mistake if the thing ends up running away. Our good friend Chris is bearish on Palantir. He today is deciding if he should buy more Palantir puts. He said this today, that the market is very choppy and that he sold out of some gains, contemplating adding more puts on Palantir. Look, puts on Palantir might end up being a good decision just given the valuation and where it ends up going. The reason I'm not buying puts on Palantir and the reason I think it's a little scary to buy puts on Palantir and it's a little scary to do some covered calls on Palantir is because if this market continues to be irrational, which, I mean, let's be honest, it's $500 billion in 5 weeks on Nvidia, $100 billion a week. Like, that's not rational by any sense of the imagination. Palantir is heading to $30 if that happens. Like, if this irrationality continues, this is not going to be a stock that easily comes back down to that $20, $21 range. It could easily happen if the other guys take a beating and if the broader market takes a beating. But if the broader market doesn't take a beating, I don't know if Palantir takes a beating. I mean, at this point, the numbers were good enough. This wasn't a meme rally to me. I mean, 50% in a week feels like a meme rally, but then you got to realize institutional investors want the stock and they want the stock for a reason. And here's the data point on this. Every single bank upgraded Palantir's price target to basically this price. The only one who hasn't done it is Rishi from RBC. And at this point, I don't know who's going to be able to help him, but outside of Rishi, everyone, I mean, the two most bearish analysts, Brent and Tyler Radke, who had a $10 and $13 price target, both of them raised it to $22 and $20. And, we're at 25. Like, pretty much everyone on the street thinks that 22 to 24 is a reasonable 1 year price target. Now, we've gotten that 1 year of gains within 1 week. So that's where it feels a bit irrational. But it's definitely not unreasonable to imagine Palantir staying or consolidating at the levels from 20 to 25 for the rest of the year. And so if you buy puts on it at 25, maybe if it goes to 20, you do well on those puts. But if you're looking below 20, I don't know if that happens that easily, dude. I think the S&P has got to have a nice 7 to 8% correction to see that happen on Palantir. And maybe it does, but if it doesn't, then it's going to be okay. Andy says, do you think we're out of the $10 trenches? I do. I think 16 could happen on Palantir. I just think the whole market would have to take a massive dump, like S&P to 440 type of a dump. And again, I keep asking myself every day, what's the reason that would happen? Like, why would that happen, right? Like, what is out there that would cause that? We're going to get a nice CPI report tomorrow. What happens if CPI comes in at 2.9? I don't think Palantir is going to $20, right? Not on that catalyst. I think we're in this weird cycle where Nvidia's earnings are going to determine pretty much everything on February 21st. If those earnings basically show there's no real guidance and the growth is just not as much as the market thought, and there's a little bit of demand issue, maybe some inventory supplies are stacking up, so there's just not that much demand for their GPUs. Yeah, Nvidia's going to take a hit, and the rest of the market's going to take a hit, which kind of did happen back in August of 2023. Nvidia was up for like 2 seconds after hours, and then it came down. And then we saw Palantir go down about 5% as well. But if that's not the case, then this game can keep going on for a very long time, and it can be a really fun game this entire year. Michael says, I made more money off AI since buying at 24, which sold over 31.25 today, which is an overbought like Palantir. And when you chase in this type of market, Palantir will correct, and a pro doesn't care. I think that's fair, and I think a correction could happen. The question is just when. Chris says, realistically, how much can you make shorting Palantir? Worst case scenario, it dumps to 18, 19. Yeah, I mean, it depends. If you load up on a lot of puts, obviously, if it comes down even a little bit, you can make a lot of gains just based on how you do a put strategy. But yeah, I agree. I mean, worst case, I think 18 or 19. Yeah, could it go to 16? Sure. But like, you got to think psychologically again, every dollar it comes down, there are buy orders ready to buy that dip. And now they're not just buying the dip to buy the dip. They're buying the dip because this company is growing 70% year over year in US commercial. And that's a company you want to buy the dip on. And Snowflake at 76 billion, which is just stupid. There's no reason Snowflake should be at that market cap. That's also a proxy to let you know where Palantir should be more valued at. Probably doesn't make sense. Either it's binary to me. Either we're in a massive bubble across all these AI stocks and SaaS plays, and this thing's got to correct, and it's got to correct violently before we come back to these levels, which means, 20 to 30% down, or we're kind of just going to go sideways for a while / melt up, even though melting up, I think, is going to be harder to do just given how much euphoria is here. But staying sideways is also not that crazy for the next couple months, given the numbers are real, the markets are real, and there's no real sort of black swan event, no crazy catalyst. The Red Sea isn't doing it to get the S&P to fall. QQQ was down on the day as IWM was up. So we did see a little bit of rotation from the QQQ to some of the small caps. S&P also was down on the day. Again, inflation's coming down. Interest rates are going to come down. The catalysts have lined up to make sure that stocks don't necessarily have to dump as much as people think they have to dump. Serge says, this euphoria is similar to when Palantir went to $40. I wouldn't touch this with a 20-foot pole. I am very sympathetic to that claim. As bullish as I am, I'm very sympathetic. I don't think it's exactly the same as when it went to $40 because that was a zero interest rate time. Palantir was worth close to 100 billion and they were losing money. Like that's just a whole different level of insanity. But is it euphoria? Yeah. Is it euphoria? Yeah, it is. It's just, it's a little bit more justified euphoria. And the question is, where's the market going to allow the justification for the euphoria to go? So far, here's the thing. Let's say Palantir goes to 22 and you're at 16 and you bought a ton of it or 17 or whatever. And now you think it's coming all the way back down to 19. That's when I think we're going to see a lot of sell side pressure because people are just going to be like, you know what, fuck it, I'm going to take my profits. And there will be plenty of people waiting to buy the dip right there. So I think it'll balance itself out. But it's going to need a lot of negative momentum to keep hitting it on the downside to get this sucker to go down. It's not going to be as easy as it was in November when it peaked at 21.85 and then just easily went back down to 16. It's not going to, it's just going to be a little bit tougher, in my opinion, now to see where it goes. Honestly, none of the markets have had a really hard pullback in a while, which would be healthy for the markets. I agree, Serge. I think it would be very healthy to see a bit of a pullback. I think all of us would agree that it would make things a little bit more reasonable. And that's the question, right? In November of 2021, all of us should have reasonably said, okay, this is getting crazy. We are back to November 2021. The S&P, the NASDAQ is at, where's the NASDAQ today? The NASDAQ is at what, 16,000? Is that there? Or 15 something? Yeah, 15.9. We peaked. Let me go to the max. Let me go to the 5-year. The peak was 16,212. We're at, look at this. We went all the way down to 10,000. And then we came all the way back up after 18 months to 16,080. Another percentage point, we're back up there where we were in November 2021. And the question is it a bubble? I don't know. It's like it should be easy to kind of spot if it's a bubble, but I don't know if it's a bubble. It's a little hard to fully justify is if it's actually a bubble. Chris just tweeted, because Chris, it just popped up on my screen. Rate cuts likely won't happen until the summer, Atlanta Fed chief says. So Raphael Bostic, the president of the Atlanta Fed, says that it's pleased with the economy performing. They want inflation to go down to 2%. Well, Jay Powell kind of pretty much already said that, so there's no good news there. There's no new news there. But if it's not happening until the summer, June, July, then market maybe has to price that in a little bit. But again, it seems like no bad news is needed for the market to price in anything at this point, given how the market's basically decided they want to run. I opened some very small puts on SPY and QQQ to protect downside, but I think Palantir might stay elevated even during a pullback. Too many firms are building their positions. Yeah, that's another thing. Another way I know people are hedging it, they're just buying SQQQ, which is the inverse QQQ fund. So this thing goes down when the market goes up. This thing goes up when the market goes down. It is inverse to the QQQ. So that's another way I know some people are hedging. To me, I'm not an expert in hedging. I need to learn a lot more about it. I don't want to pretend to be an expert. To me, I think I'm just trying to free up some cash. And so that's why I got rid of Google today. I think 10,000 freed up in cash is a nice little, a nice little safety net, at least to have some money if we get a nice dip. And then on top of that, tomorrow, my goal is with Robinhood to take out my initial from the position. I want to sell all the calls in one strategy. And in the other strategy, I just want to take out my initial. Now, given how crazy it goes tomorrow, if Robinhood really crushes it, then we'll get rid of the whole position. But if not, at least get my initial back, because that would give me a decent amount of cash to work with over the next couple months if we see a correction. And that's how I'm positioning it. I don't want to sell PayPal. I think PayPal at this level is stupid. A market correction shouldn't get PayPal to go down lower. TFC is the one regional bank that I think is not only going to survive, I think they're going to massively outperform. That TFC position is going to probably 3x as it gets to $45 over the next 18 months. So to me, I want to leave that untouched. They're doing everything they need to do. They just sold their insurance business for $15 billion. They raised so much capital. Their deposits are fine. 7th largest bank in America. A bank contagion could happen, but I don't think it would affect Truist out of all banks, just given how they've stabilized themselves and prepared for this. So that I'm not touching. Palantir I'm not touching, because you want to just, leave Palantir as it is. This euphoria can keep going. And if it goes lower, we'll just buy the dip. And then CleanSpark, to me, I'm just letting that sucker ride. CleanSpark is a $5,000 bet that becomes $20,000 if CleanSpark goes to 20. And CleanSpark's at 16. We're $4 away from 20. So if Bitcoin keeps doing what it has to do, then CleanSpark should do what it has to do, and that'll be something that pays off at the end of the year. And that's kind of how I'm positioning the portfolio that I have right now. Amit, CNBC saying someone sold 2 million shares of Google, but still holding lots of shares. They must have seen it in the order pool that someone sold 2 million shares. Yeah, Google right now down about 1% on the day, 148. Hardest part is figuring out when the bubble pops, may or not be years early. That's the thing. Either Nvidia's either Cisco in 2000 or it's Cisco in 1996. And if it's Cisco in 1996, then we've got years of growth ahead of us, and 700 is going to be cheap because that sucker's going to 2000, right? Like that would be the trajectory of it. Or we're in 2000, and maybe Nvidia is not literally Cisco, right? Nvidia is going to be fine over the long term, but it's $700-800. I don't know if that's as sustainable as the market thinks it can be. So we're gonna see. We're gonna see how it ends up playing out. Here is who did I want to show? Oh, here is the Fed talking about when they should. This is a guy who, I forgot about this guy. This guy's been bearish since 4,000 on the S&P. So let's hear his thoughts on what he thinks about what the Fed should be doing and how he's positioning the market.
Jason Trenner, Chairman and CEO of Strategic Research Partners. That is a Baird company. A lot of people, Jason, say that we don't need rate cuts because earnings are validating current valuations.
Well, it depends on how you're looking at earnings. If you look at the MAG, we looked at this weekend. If you look at the MAG 7, earnings for the MAG 7 in the fourth quarter were up 59% roughly. For the S&P 493, they're actually down by about 3%. So the way the index is constructed, the market doesn't look that expensive because those big companies are providing big earnings growth, but it's not evenly distributed. And so, in my opinion, for the entire market, it probably wouldn't be a bad idea to have a rate cut or two, but certainly it doesn't seem to need it right now.
So you didn't have any Doritos and noticed that the bag was only half filled.
Oh yeah, no, that was. I think
we need rates to go higher to get rid of this.
That was
shrinkflation.
that was a really positive message on a secular holiday from the president. Maybe something a little more upbeat.
You wouldn't worry if they.
Okay, so his basic argument is the Fed shouldn't be in a big rush to change rates, obviously, because the market's doing well. We kind of all know that. Zocol says, as of now, Nvidia is Patrick Mahomes. Yeah, I would agree, dude. Patrick Mahomes right now is in the discussion of being the GOAT when it comes to football. I don't think he's there yet. I think Tom Brady's still ahead of him. He's got a couple more Super Bowls to be able to acquire before he officially gets there. But Nvidia is Patrick Mahomes right now. Nvidia is Patrick Mahomes right now. Ryan says, famous last words. It's different this time. This is just another bubble that's getting ready to pop. Let's do a poll. Let's see what you guys say. Let's do a poll. Are we in a bubble or is this not a bubble? Let's see. Let's see. Because I don't know, dude. Bubble or not? Yes, it's a bubble. No, it's not a bubble. I kind of feel like it's a fucking bubble, dude. It's not that complicated. If you look at fucking SMCI, it looks, we said this last week, but it looks like a shit coin, dude. It makes no sense. Look at this shit. It hit 810 today. Wow. I didn't even know it hit 810. It hit $800 freaking dollars, dude. Insane. Absolutely insane. It's just incredible. I mean, it's just, I think here's the thing. We got to figure out like either my Google sell is going to look good in a month or it's going to look really bad, because I could have made a lot more money if I waited a month, but I don't know. Today I got scared and I was like, I feel like it's just heating up, and I feel like it's heating up in a way that's a little scary. We got 57% people saying no, it's not a bubble. Wow. People are pretty damn bullish. Remember the Tom Brady FTX commercials? Yeah, that should have definitely let us know back then. It was a bubble. Many traders started buying SQQQ last week. Oh man, it's just hard to know. We'll talk about it tonight on Finance Junk as well. I was talking to Chris this morning. He thinks it's definitely a bubble. Chris thinks this is stupid right now, and I agree with him to an extent. I just don't know how long it's going to take her if it actually gets into its bubble. Ty says it's okay to admit it's a bubble. It doesn't mean you have to stop making money on it. Just understand that the whole thing is on the razor's edge. Doesn't matter if it's a bubble or not. Just keep putting money every month and you'll win. That's true. Okay, updates on Waste Management. Let's end it on there. They had earnings today. Their website doesn't have their earnings, so let me go to Twitter and see what they say. Waste Management, for those that don't know, is a company that takes care of people's trash, at least in the United States. I'm pretty sure they're international, but definitely in the United States. So they should have their earnings out. Let's go to their website real quick. Their stock right now, ticker symbol WM, is up after hours. Seems like earnings weren't horrible. News. It doesn't look like we have earnings for them. Let me check CNBC. We should probably have it on CNBC. Let's check CNBC. And then tomorrow, guys, we'll be live with Jesse. He'll be on the channel, and we will discuss Robinhood. And that'll be a hell of an earnings. And let's see what happens. Wow, we don't have the earnings anywhere on Waste Management. I don't have them. That's so weird. That's so weird. They're not on Twitter anywhere. No one tweeted about Waste Management. No one tweeted about Waste Management. No one cares. Oh, they will release the ER at 5. Well, it should be coming out right now then. It should be coming out right now. It should be coming out right now. Should expect SPY only 50% every 5 years. It's now 80% correction coming. I think there's a correction coming. I don't know if it's going to be 30%. I'm leaning more towards 30%. Dude, 30% down on the S&P would be, that would give us a 350 S&P. There's no way we're getting a 350 S&P. These numbers are not good enough to get there. If we get 350 S&P, dude, that's 2022 bottom levels. I don't think that's happening. Robinhood 1207 right now after hours. That would be weird if we get to that level. That would be very, very, very weird. Never say never. Yeah, famous last words. Could you imagine, dude? 350 S&P. I mean, like, I don't know if the market would be, all the bears would be like the happiest people in the world if we get, like, imagine Nvidia, those shorts would be like saved. Paul from Everything Money, his brother would not kill him, like, given he's using his brother's money to short Nvidia. Like, it would be insane. All right, this thing is not out today. I don't know why it's not out. We'll talk about it tomorrow morning. I don't know why Waste Management's numbers are not out, but we'll talk about them tomorrow. They're not the most important company. They are an important company, but it seems like they've done well since they're up after hours right now. SoFi came back to hit 847 and should hit 870 tomorrow. Yeah, good CPI report. SoFi is going to do fine. A lot of these companies are going to do fine tomorrow on the CPI. It might be short-lived, but it definitely will be good for the broader market. All right, so two things. I'll be back at 8 p.m. and I'll be doing Palantir deep dives. That's a segment I do on the channel every day. I haven't done it in 2 weeks because of Palantir earnings, but we'll be back. Alex Karp wrote a brand new article today. So we're going to be reading that article and analyzing it on deep dives. That's going to be at 8 p.m. Okay, so come back at 8 p.m. We'll be reading Karp's new article. He wrote it on Time Magazine. Seems like it's going to be a fire article. I haven't read it yet. We'll read it live, then we'll talk about it. That's number one. Number two, we'll be live tomorrow, 3:45. Go into Robinhood on earnings. This is the first stock that I really have researched on my own outside of Palantir. So I'm either going to be right or wrong tomorrow. And it's this is the risk you have to take as an investor, especially as someone who's publicly putting out their opinion. I think it's going to go good. The one thing I'm scared about is the fintech narrative is going to tank the bet on Robinhood. And if that happens, then, we might see a $8, $9 share price tomorrow. We might see a $15, $16 share price tomorrow. So we'll see. It'll be after hours. I'll be here with Jesse. We'll talk about Robinhood, and that'll be a very, very exciting market open or market close because someone's going to be right. And maybe it's me, maybe it's not. So we'll see. And we'll keep going from there. And so that's it. And then we'll have Finance Junkies again today at 9 p.m. Pray for Meet Kevin's family as well. Yeah, I think did he give an update this morning on YouTube at all? I don't know if he posted an update, but his daughter, one of his twins or his triplets, is in the hospital right now, and it's not really the best situation. So big love to Meet Kevin. Hopefully everything goes okay. At the end of the day, whatever opinion you have about him as a person, no one wants to see someone's child, suffering that much. So hopefully Meet Kevin's family is in a great situation. And I just met him 3 weeks ago. So it's crazy because if I had met him when his family situation went down, we wouldn't have been able to do the interview, right? It was like literally right before everything happened. So it's crazy just how things happen. And he was in the greatest of spirits when I met him. He's the nicest guy in the world. I know people have opinion, but he spent time with us. We were riding his go-kart after. Like, he's such a nice guy. He gave me hours and hours. He was ready to go for 5 hours for an interview. So His team is really good. They're good people. And hopefully everything's okay with his family. All right, that's it for me. Thank you everybody for joining. Palantir at the after hours. We closed above 25. Big deal for us. 24.74. Not bad at all. Let's see if we can maintain the momentum and keep it going. I sold $10,000 worth of Google today. So we've got 10 grand to buy maybe the Palantir dip if that happens. If not, we've got 10 grand in cash and we'll see what keeps going from there. That's it. Thank you, everybody. I will see you later today, 8 p.m. And then we'll be back tomorrow live for the market open. It's going to be a big day tomorrow with Robinhood earnings. All right, everybody. See you a little bit later. Thank you, guys. See you at 8. Bye-bye.